Hello, everybody. Welcome to the webinar. My name is Troy. I'm a Senior Account Manager with AvaTrade. We'll be getting started with the webinar at this time. Before we get into some fundamental analysis and looking at some opportunities on the chart, let's do a quick systems check. Just type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. Looks like we're good to go. I've got enough responses. Thank you. And as we get going, as always, keep in mind all investments have risk. Again, I think we all understand that. There's also obviously the potential for nice profits as well, which is why we're all here. But investing in CFDs, especially when using leverage, it obviously involves elevated risk the higher the leverage is, and so it's important that you have risk management in mind as you go through and develop your trading plan. You want to think about your trade sizes and your exposure and that sort of thing. Now, what we go over is not to be considered financial advisement, but is coming from an educational perspective. But I'm happy to assist with if anyone has questions about, how much is each point worth with this trade size, or how much am I exposing if I put my stop loss this far away. We certainly can run through the mathematics of that and go over those sorts of educational things. And as we go through the strategies, it's meant for you to use it as an information source to hopefully improve upon the strategies that you're already using, or if you're new to things, to build a brand new strategy maybe as we get going. So just keep those things in mind. You can read the full risk disclosure statement on our main website at avatrade.com as well. Okay, so what is fundamental analysis? Real quick, basically it's the news, right? It's the information coming in about whether it's breaking articles about Brexit or about U.S.-China trade negotiations, or it could be scheduled events like jobs numbers. There's an FOMC statement, interest rate decision out of the U.S. later today, and a lot of scheduled announcements in different countries today that we'll take a look at. So we've got a couple different types of fundamental analysis to do. And so we kind of group those either as extraordinary economic events, like I mentioned, Brexit, China trade negotiation, etc. The timing of which, when news is going to come out about those sorts of extraordinary events, the timing is not as predictable, nor is the scope of what might break with those headlines. The other type of fundamental analysis, which is number 3 here, the regular economic events, those are obviously more predictable. We know exactly when the announcement will be, what it will be about. We don't know exactly how good or how bad the announcement will be, but we know a lot more about the timing and subject matter of those types of regularly scheduled economic events compared to the extraordinary things that can break at any time. Okay, so as we go, please ask questions, give input at any time. If I go too fast, feel free to interrupt me. I don't mind. It really adds to the usefulness of the presentation and of the webinar when others share some information as well, because it might be something that everyone else is interested in too, and maybe I'm not talking about it, okay? All right, so as we move first into the fundamental news, then we'll go to my demo account. We'll take a look at the live movements on the chart and look at some potential entry points for moves based on the fundamental news, and maybe with an idea of what direction you might prefer to trade based on the fundamental news. So let's take a look, and we can see some things happening. And you get an idea real quick when you look at the breaking headlines on trusted news sources. You may use different news sources than I use here. That's fine. I tend to trust Reuters. I tend to trust investing.com and some other sources that we use quite often to see what's happening recently in the news. This article, it's been the focus for some time now. The U.S.-China trade war is still leading the headlines on many informational sites. And so what we see here, the focus is still on Trump and the U.S.-China trade war. Specifically, this headline is saying the focus is squarely on what Trump will do next, basically because he kind of holds all the cards right now. He can raise tariffs on China on the 15th if he wants. He can roll the tariffs back that were already raised and get a deal done with China, or he can push and try and get a deal done without rolling back tariffs. So everyone's just waiting, and the markets are waiting. What do you think would happen if Trump tweets out today, decided to roll back tariffs and sign deal with China? What do you think would happen to the NASDAQ, the S&P 500, the European indices? What do you think would happen to them almost immediately? If Trump tweeted out, we're going to have a deal. I agreed to roll back tariffs on China and we're signing phase 1 trade deal. What do you think would happen with the major indices? In Buru, you say they would drop. Why? If you've been following the markets at all, if there's a deal between U.S. and China, the markets are responding positively to that idea. Okay? So the indices, the U.S. indices, yeah, they're paired against the USD, but what we've seen is anytime good news has been leaking out in the headlines about the U.S.-China trade negotiations, if people think they're closer to a deal, what we've seen is the indices have been rising. Now, there's no guarantee that because that happened before, it has to happen again. But we're going by the trend, by what we've seen. And so, the indices certainly have shown the trend of rising with good news about U.S.-China trade negotiations and pulling way back when there's bad news about U.S.-China trade negotiations. And either could happen today. Either thing. The 15th is only like 4 days away, right? So that's an imminent deadline coming. Something has to give. And either tariffs are going to be raised, or they're going to extend the deadline, or they're going to reach a deal. Something's going to happen. And when that happens, there's high potential for the major indices, for gold and for oil to move like crazy. Okay? Why do I say there's huge potential for that to happen? If new information breaks between now and the 15th, because we've already seen what's been happening each time it happens, that a new article saying some new information about U.S.-China trade deal, each time an article comes out with new information, we've seen the movement. So again, there's no guarantee what happens in the past happens again in the future, but this is what we use many times with deciding what to do with a trading strategy. Trends, past behavior, that sort of thing. So right now, everyone is saying, right, lots of sources anyways, are saying the focus is on U.S.-China right now. Look at another headline. We could go from Reuters to another location. European stock slip as trade deadline looms. Okay? Multiple sources. Top headlines, when you go to those sources, it's all U.S.-China, right? Trade deadline. Markets are worried. Yesterday, the market started to pull back a bit. Gold jumped a bit as soon as people had an inclination that maybe there's trouble brewing with U.S.-China negotiations, right? And the opposite could happen if something leaks out that they're having progress. So look here. S&P futures, red. NASDAQ futures, red. The numbers on Dow, S&P 500, NASDAQ from yesterday, red. The VIX index, green. Does anyone know what's the VIX index that I'm showing you here? S&P 500 VIX? What's the common name for the VIX index? Starts with an F, ends with ear. Yeah, fear index, right? The fear index, this VIX index, many times referred to as the fear index. And by the way, we have it on our platform as well. I'll show you. It's in the green. It's rising. Why would the fear index be going up as the futures on the indices are dropping? Yeah, exactly. Indices are dropping because people have fear about the market. Therefore, they're buying into the fear index and it's rising. What else do you expect would rise if the fear index is rising? What number one safe haven would probably rise as the fear index is turning green and rising? Without looking at the chart, I can tell you the safe haven gold, good and Buru, the safe haven gold is likely rising, okay? Because the fear index is up and everything else is red, 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 meaning losing, dropping. People are running from the riskier assets right now. Buying into the fear index, maybe buying into gold. We'll have a look, okay? So we get a quick idea which way is the wind blowing. The wind is blowing with fear. People are running to maybe safe haven, running from riskier assets right now, at least at the moment, right? All the headlines tell you why. Okay, stocks are slipping, trade deadline looms. We get the idea of what's happening. What about the economic calendar? Okay, we talked about two types of fundamental news. We just looked at the extraordinary news, right? And by the way, there were some polls out of Great Britain. There's also some fear in the markets, and the pound was slipping because of the elections coming up. Some polls showed maybe something that wasn't so good for what the markets were hoping to see. Okay, so also Brexit is pushing with some fear into the markets as well, and so we can see that if we go to the main headline, let's say on Reuters. We could go to European markets. European shares edge higher ahead of UK election. Okay, maybe they're getting a little optimism with the UK, so that's something to keep in mind. The elections are playing a role, and earlier it showed European shares slip when they saw a new poll showing Boris's numbers not looking as good. Okay, so now we look at what about the scheduled events for today. Everybody, someone's asking, Anthony, good question. How can you get a copy of the recorded webinar? All of the webinars now are recorded, and within a few hours after the early webinars, like today's, they're posted on our YouTube channel. Just go to YouTube, search AvaTrade channel, and you'll find the AvaTrade channel, and they're listed under English webinars on the AvaTrade channel. Okay, so you'll see all the recent webinars there. The Monday evening one, because it's later in the day, usually isn't posted until the next morning. But the Tuesday, Wednesday webinars are posted to the YouTube channel within a couple hours after the webinar ends. They're there. So if you can't catch them live, you can watch them same day while they're still relevant. Okay. Now, look at the slew of announcements coming up. Not much has come in yet today. Some flat numbers out of South Africa. But look what's coming on the USD. Look at this list of announcements, including a high-level announcement, core CPI. Okay, lots of announcements coming in, CPI numbers. We've got crude oil inventories. If you don't know what the crude oil inventories are, it's once a week, almost always on Wednesday, unless there's a holiday that moves the day. Crude oil inventories show you what's the stockpile of inventory that's built up in the U.S. of excess crude oil. And obviously you can understand if the inventory numbers come in higher than expected, a higher supply than expected, that tends to cause bearishness on the price of oil. Higher supply means price might drop, right? And if these numbers come in more negative than expected, then that means the supply is getting smaller and smaller, then the price of oil tends to be more bullish. Not always, right? Nothing's 100% in trading. No one move is guaranteed, but this is the typical trend we see with crude oil inventories, and you see it's a high level announcement. High volatility expected with it. So what else do we have later today? FOMC projections, FOMC statement, FOMC rate decision in the US. Okay? Big deal. Can cause huge movements on any US related assets, as well as maybe gold and oil. Okay? So US indices, US dollar, could huge movement today potential. Large announcements on CPI, on crude oil inventories, on FOMC statement, on interest rate decisions. You get the idea. You have to build this into your trading strategy, right? If you open positions now, you have to know that later today, the markets could be shook. What you think is right now might not be right later today when all that fundamental news that's scheduled comes in. Okay, so you have to take that into account with your trading strategy as you start to look for entry points and exit points right now. Maybe you're looking at potential pending orders later today. Maybe you're looking at getting in and out before those large announcements come. That could mess up the movement that's moving currently. Okay, you get the idea. Right now, we saw a lot of negative sentiment that we looked at on Reuters, on investing.com, on the extraordinary fundamental news. The futures were red, all of that. Gold was rising, oil was dropping. So you could ride that trend now if you want, if you believe in it. But maybe you think about getting out of those moves before all this new information comes out later today. Because when this news breaks, what if it's really positive news? What if the CPI numbers are great out of the US? That could cause a reversal of this negative doom and gloom and cause a rebound of the indices. Could cause gold to come back down and oil to go back up. So you don't know what you don't know, right? And unless you're Nostradamus, you can't predict what they're going to say here for sure, or what these crude oil inventories will be, or what the CPI numbers will be. So your strategy now might be more of a scalping move. Your strategy later might be wait and see what these announcements bring later today and then make more of a long-term move. It's just an idea. I'm not saying that's how you have to do it, but whatever your plan is, you should take into account the news that you know now, which is this stuff. This is what we know now, right? Fear, stock slipping, fear about US-China trade decision. And then we also know the Fed decision is coming later today. Okay? And some announcements through the day. All right, so any questions before we jump onto the chart to try and apply some of what we know now fundamentally into a strategy on the chart? Type OK if you're with me so far. Any comments, questions? Go ahead. Okay, so let's move on to the chart. I have NASDAQ up right now on 15-minute candles. Okay, so it's been kind of a consolidation sideways for the past couple days, right? This was yesterday. It reached a high and backed off and kind of trending down slowly and sideways. The market's waiting, right? It seems to be waiting for a big announcement of some kind, waiting to find a direction. Now, a little while back, just a few hours back, this was a nice resistance point. Okay, you see resistance here from yesterday. It worked its way back up just a little while ago, a few hours ago. That was a tremendous spot to trade down from. And you see it responded to the resistance and came right down. Okay, it bounced down off that resistance. It mimicked exactly what happened right here. Okay, hit resistance, down. Hit the same spot almost, resistance, down. Why was this movement here predictable? Those articles I showed you, the fundamental news, those were out right around this time, even before. So does it make sense that with all that negative news, with this snapshot right here, red, right? Fear index up. Indices all in the red, futures, and then some, right? Does it make sense that you would have trusted this resistance level and traded down? Right? That's the NASDAQ. What's the NASDAQ do when there's fear? When the fear index is rising? More likely than not always, obviously, but it's more likely when the fear index is rising, when gold is climbing, that indices might pull back, right? And it's exactly what happened. So if you knew the fundamental news situation, you could easily have known to trust this resistance level and trade down. Okay? Easy move right here. What kind of pending order would that have been? Let's say you're too busy. You knew the headlines were negative. You saw the move was the movement was getting near the resistance. If I would have put a pending order to sell as it got close to the resistance, to sell from this point, what kind of pending order sells from a higher point? If the movement was here climbing and I saw the resistance and I knew, hey, there's no trade deal with US-China yet, maybe you think, why should it break the resistance, right? So you put a pending order to sell if it gets near the resistance, and boom, look at the profit you'd had. It dropped from 83.90 to the current price, 83.61, about $30 it dropped. Yeah, it's a sell limit. Very good in Buru. It's a sell limit. Michael, you were on as well. The take profit, you probably could have taken a take profit once it consolidated. It consolidated now. It kicked down from the resistance. It consolidated. You could take your profit now, or if you believe it'll go to the next support level, you could wait and see if it comes down to this support level here. Support, support, resistance, responding to the resistance. Perhaps it's going to reach the next support level. But that's up to you individually. You could take some of the profit now, do a partial close. And if it reaches the next support level, you could close the rest. Those individual decisions are up to each trader, obviously, at what point you take profit. Shiyenye, if that's what you were asking. Okay, so sell limit. How would I do a sell limit? Let's say it was back here. We saw it climbing towards the resistance. We understood there's tension about US-China. There's no deal yet. And you say, if it gets near that resistance, I think it'll drop. So you put a pending order. You just simply go like this. Pending order, switch it from market to pending. Switch to sell limit. Sell limit, by definition, sells from a higher point. So you would have programmed the price up here. In this example, 83.90. Okay, if it reached 83.90, it would have sold for you for whatever trade size you wanted to put. You know, if you put one lot, and I'm not saying you have to trade with one lot, whatever trade size is right for you. One lot's 100 indices, right? 100 indices in one lot. This dropped in the last 2 hours, 3 hours. It dropped from 83.90 to 83.60. That's $30 drop. If you had a one lot position, you take that $30 drop and multiply it by 100 to calculate your profit, because one lot has 100 indices. You can see here. So this $30 drop, you might say, oh, what's $30? Well, $30 times 100, right? Times 10 is 300, times 100 is 3,000. So you could have made, with a simple one lot position, if you have enough in your account for that trade size, you could have made in this little drop from here to here to where it is now, $3,000. $3,000, just like that, okay? And it's not a complex strategy. If earlier today you looked at the news, you saw the fear index was rising, gold was rising, you saw the indices, the futures were turning red, boom. You take your sell from near this resistance. With a half a lot position, 1,500 profit. With a one lot position, 3,000 profit already, etc. Okay, a tenth of a lot, 0.1, 300 profit in that little move in a few hours. Okay, so let's see, someone typed a note here. Okay. Albano has left, but he was complaining that I'm trading on a demo account. If he was here, obviously he could hear the explanation, and everybody else. By regulation, I have to be on a demo account. I'm not allowed to be on my live account. So if Albano understood, if you're with a legitimate broker, when they're doing their live webinars, they have to tell you they're on their demo account. It's by rule. So I'm sorry that he was upset by that and left, but hopefully everyone understands. And it's actually a good thing that we're following the regulatory rules. Okay, so and by the way, the demo account has the exact same live movements as your live account. It's exactly the same. Same assets, same prices, same movement. So nothing to be concerned by. Omar, I can't tell you when to buy or sell, right? I can't tell you to buy or sell. But if you feel that the fundamental news is negative and that the NASDAQ should drop, then this was a nice resistance level right up here. Resistance, resistance. If it comes back up to the resistance level and you check the news at that time and you see, hey, everything's still negative, the fear index is still rising, then maybe you feel that that's a good spot, this price level in this range to sell from, right? But I'm not allowed to tell you, hey, if the price hits 83.90, sell. Certainly not. And how do I know what the news will be the next time the price gets up at this price? You got to check at that time as well, right? Got to make sure you see what's happening most recently. That's the whole point of this webinar. Check the fundamental news like we did, then go in and look for entry points. Okay? The fact is, a few hours ago, the fundamental news was negative and it was near the resistance level. So that was a good opportunity to sell then and take your shot. Okay, so there's a support level down here. What kind of pending order could you put? Let me show you two ideas, okay? What do you think it would take for the markets to break this resistance level and go up? What do you think it would take to break through this resistance and go higher? What kind of news story? Let me ask it different. If Trump tweets out, we've got to deal with China, do you think that's enough to make it break this resistance level up here for the NASDAQ? Yeah, David, positive news. Do we know when that might happen in terms of China, US, or Brexit? No, we don't know for sure. So what kind of pending order could you put up here above the resistance just in case good news comes out and this resistance breaks? What kind of pending order would buy from right up here? You could program it that if the price hits up here, to buy. What kind of pending order is that? I'll show you the types again. This is preparing for the unknown. Yeah, buy stop, exactly. Pending order, buy stop, right? You could say if the price hits 83.99, let's round it up, 8,400. You could say if the price hits 8,400, then buy. Right? Okay, boom. Now I have a pending order waiting. If the price hits 8,400, it will buy for me now. And I'm doing this with the understanding that the potential is quite large for positive news to break today with U.S. China. Okay, it can happen. Couldn't there also be negative news? Here's the support level down here. If there's negative news that breaks on U.S. China, what kind of pending order could I prepare right now to sell if it breaks this support? What kind of pending order would sell if this support gets broken? The buy stop buys from a higher point. The sell stop sells from a lower point. Because today has the potential for such big news, and not just China, US, what else could break this resistance up or break the support down? What else could cause that? Let's say maybe 83.35 could be a spot for a pending sell stop. And by the way, I'm not telling you that you should put a sell stop at that price. I'm just demonstrating the concept here. You can put whatever price you want. or direction you want. But the idea here is still valid. Yeah, the Fed rate cut today, or not cut, right? The Fed rate decision, we should say, right? They're not expected to cut the rate today. They're expected to keep it the same. But beyond whether they cut the rate or not today in the U.S., the interest rate, they also have a statement, and the statement might be bullish or it might be dovish, right? You don't know what they might say. And a lot of times the reaction in the markets is more to what they say rather than to what they do with the rate. Okay, so in this article we looked at, in this article here, whoops, where is it? Here. After year of living dangerously, Fed likely to signal time to lay low. This article goes on to explain that they believe the Fed's statement today will be that they're not going to lower rates again anytime soon. If they come out and say that, what do you think the NASDAQ, S&P 500, Dow Jones, what would the reaction maybe be? If the Fed today says, we're not going to raise rates anytime soon unless there's an extreme need for it in the economy, if they come out and say that, that's considered a dovish statement. And the major indices love low rates. They like it if they think the Feds are going to lower the interest rate. The indices tend to rise when interest rates are lowered, and they tend to not like it if interest rates are raised, right? So if the Fed comes out and is very dovish and says, we don't think we're going to lower rates anytime soon at all, you might see indices pull back, okay? I'm not saying it will happen for sure, right? But the potential is there with this type of announcement and statement tonight. Sell stop is not the same as stop loss. No. Sell stop is a pending order that opens a sell position if it hits a lower point that you programmed. Stop loss is if the move after it opens goes the wrong way, you could program a stop loss at a certain distance back. Okay, good question. So let's go back. So I opened a pending order to sell if the support drops. If the support breaks with the big news today. I opened a pending order to buy if the news is positive and breaks the resistance. Okay? Where would it make sense for me to put my stop loss if this is going to open as a sell? Where could I program the stop loss to be? It would only open if the support breaks. Where would it make sense to put my stop loss on this sell stop? I know where I would put it. Does anyone have a suggestion? Where should the stop loss typically go? Yeah, just above the support makes sense, right? So I could go into this sell stop and I could say, okay, if it breaks the support and triggers my sell from down here, then I would assume it won't go back above the support unless it was a false signal. It should stay below it. This should become resistance once the support gets broken if it's a true move. If it then goes back above, then maybe I want to get out of my sell before I lose too much. It's just one idea. And so maybe my stop loss would be back above up here, 83.48, let's say. So my sell stop, I can go ahead in advance and say my stop loss would be 83.48. Modify. Okay, there we go. Now I have a stop loss. If this pending order opens, I'm only risking back up here to my stop loss to the top side of the broken support. The same with my sell stop. My buy stop. If it triggers, I could have my stop loss back below the broken resistance down here, assuming that if it breaks through the resistance, it won't go back below. And if it does, then I take my small loss, right? You don't have to trade with stop losses, but it's one way to do things to manage risk. So 83.88 would be back below the resistance, okay? So I could go here on my buy stop, and I could say stop loss 85, okay? Just for example. So now we see the stop loss. If this buy position opens up here, The stop loss is back down here. Okay? And where would you take profit? You look for the next support level maybe for a spot to take profit. That's up to you where you'd want to specifically get out. I see a support level here that could be a smart spot maybe to first think about taking profit. And if we go to, let's say, 1 hour candles, I see a resistance level up here. This might be a spot on the buy stop if it opens. You might think about taking profit near this first resistance level. You wouldn't have to, but you could. The FTSE will also be affected. The CAC 40 will also be affected by U.S.-China trade. Just because it's a trade negotiation between U.S.-China doesn't mean it won't affect other assets. It certainly has an effect. U.S. and China are global influencers on the markets, on the global economy. And so what's good for U.S.-China tends to be good for the globe, and vice versa. What's bad for them tends to be bad for the globe. So the FTSE, certainly you could set up potential moves based on the same concepts off of U.S.-China trade negotiations and off of Brexit, obviously, as well, right? Direct influence. Good question. Okay, so my intention here in setting up these pending orders isn't to say you should do these entry points and you should do these moves. The idea is the concept. There's huge news potential today, scheduled and unscheduled. And with huge news comes the potential for breakthrough movement. And the pending sell stop, pending buy stop waits for confirmation of a breakthrough before getting in. That's one strategy concept you can employ. I've seen it work very, very well. Not 100% of the time, but enough that you can be profitable if you stay consistent and work on proper entry points and exit points. Any questions before we move on maybe to another asset? Crude oil. Nice, Omar. I want to look at crude oil right now. So let's take a look. That was next up, crude oil and gold. And by the way, I'm looking at NASDAQ. You could be looking at Dow Jones. You could be looking at the FTSE. You could be looking at the S&P 500, etc. I just happen to use NASDAQ as the example. Okay, so crude oil. What's been happening with crude oil? Let's zoom in. 15-minute candles. What happened today? Crude oil is dropping, right? Down trend. All right? It tried to climb and down it came. Okay? So why is crude oil pushing down right now? We just looked at it, didn't we? We looked at the negative news. The fear index is rising. There's fear about the deadline on U.S.-China. What happens to the supply of oil if U.S. and China's economy is not doing well? If there's an economic slowdown because of the trade war, if they don't reach an agreement, what happens to the supply of oil? Economic slowdown, correct. Oil supply tends to go up if economies aren't doing good. And so then what happens to the price of oil? What happens to the price of oil if the supply of oil goes up because of slowing economies? Exactly. Price tends to drop. Okay? So you've got the fear index rising today. You've got major indices dropping because of fear, economic fear. And so it's natural that you see what I just outlined on the screen. Oil's in a downtrend. So Omar, to answer your question, what's good for crude oil? If by good you mean what makes crude oil go up, what do you think would happen with crude oil today if U.S. and China reached a deal? What do you think would happen with crude oil, Omar, if U.S. and China reached a deal? If there was good economic news, what do you think would happen with the price of oil? Many of you are saying probably rise. Yeah, I agree. Okay? There's no guarantee, right? But man, every time in the last month that I've seen a tweet or a news article that, hey, U.S. and China are near a deal, guess what happens with oil? It goes up. Every time I've seen news that, oh, US, China are having problems. They're not going to have a deal anytime soon. You see news like that, and you tend to see oil dropping. Okay. Again, not 100% of the time, but there's definitely a relationship there. So is there potential for big movement of oil today? If the U.S. economic announcements today, the scheduled announcements, if they come in positive, what do you think happens to oil? Here's a support level. Right here's support, 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 support. Let's say the announcements came in right now and were positive. Likely that's what you would see, right? A rebound of oil if the CPI numbers, the economic announcements that are coming in, you could see it rise. What if the crude oil inventories show a declining stockpile, meaning higher usage of oil? If the crude oil inventory report that comes in a few hours, if that shows a decline in oil reserves, what do you think happens to the oil price today? Yeah. Brent crude, US crude tend to react similarly. What do you think happens with the price of oil today if crude oil inventories are lower than expected? Meaning the supply is getting lower, greater than expected. If that happens, yeah, price goes up, right? That tends to be what happens. Okay. Again, not 100% of the time, but trading's not about 100%. It's about being right enough to profit, right? So the potential for oil to go up with declined inventories or go down if oil inventories have unexpectedly gone up, right? There's potential for huge movement in oil today as well because of the crude oil inventory report. So if we go to larger candles, 30 minutes, you could put a pending order down here and say, if oil drops and breaks the support, I sell. If oil goes up and breaks the resistance up here, maybe I buy. Okay. Again, you could set up a breakthrough strategy for oil, the same as we did for the indices. Cover yourself because sometimes it'll break through, then pull back, hit your stop loss, then go back up. You got to watch it. Okay. It doesn't work perfect every time, but the potential is there for tremendous profits today because of those announcements that are coming. Let's look at gold. Just as oil's dropping, gold's rising, right? Gold went up as oil dropped. It happens often. Gold is nearing a resistance. Look, resistance, resistance. If gold gets up around where I drew this line, it's right at a major resistance level. Okay? So what do you think it would take for gold to break past this resistance right here? What would it take? Yeah, exactly. Maybe bad news today, right? So again, you could put a pending buy stop above this resistance level up here. Okay, let's go to 1 hour candles or 30 minutes. You could put a pending buy stop above the resistance that if it breaks this resistance level right here, it must have been bad news for the market then, and you could take a shot at a buy. Right? Huge news today. If it breaks this resistance on gold, must have been bad news. Ride the wave maybe, right? And if it breaks this support down here, support, you could have a sell stop prepared. If that support breaks, maybe it was really good news on the market today, right? If this support breaks, it would have to be good, some kind of good economic news for gold to go down and break this support down here. So you're covered in both directions. Buy stop if there's bad news, sell stop if there's good news, cover your risk maybe with a stop loss back above the support here and a stop loss back below the resistance here. Take profit could be the next resistance level up here on a buy, somewhere near that line. Take profit on a sell could be the next support level down here. Huge potential even after it breaks through for further drop. Huge potential if it breaks through for continued rise before you hit the next price level. Any questions on that setup for gold as well? The same concept on gold, on oil, on indices, and all of them have the potential for huge breakthrough moves today with the type of news that's scheduled and the type of news that could break unscheduled. Type okay if you're with me. We're going to kind of call it a stop here on these assets. Sure. Example for pending order on oil. Again, this is not meant for you to copy my entry points. You use entry points that are right for you and moves that you agree with. I'm not here to tell you what to trade, but if you understand what's happening and you like the fundamental news and it makes sense to you, then go right ahead. You can make the moves. So, all right. So if we were going to do a buy stop, if the price breaks above, let me move it down. Here's resistance right here. Let's go to 5-minute candles. Here's resistance right here. It took a major drop, right? So if it breaks above this resistance level, that could be a spot for a potential buy. Okay. So you could do a pending buy stop. Switch to pending. Buy stop, just to show you how this is done. Let's say 59.20 means this resistance level is broken if it hits 59.20. 59.20. Okay, stop loss back below, maybe at 59.05. Okay, take profit. You could add later or you could put in advance. And there's my pending order. Buy stop on oil. Here's the entry point. If it breaks through, if it tests back down a little before it continues up, my stop loss is down a good distance below the breakthrough point. I call that having a wide strike zone. Okay. The FTSE in Buru, it's a major indice, so it's affected by global economic news quite a bit, and also by local news in the European Union. Okay, so, and you guys know you can adjust like your stop loss, your take profit. You can click on these lines and move them. You see, you can adjust them. So this is my entry point, this green line here. I could adjust that if I want. Okay, the green line is my entry point on a buy stop. If the price hits there, it buys. My exit point on a stop loss is down here, and my take profit, we could find a spot. Your take profit might be up here, this resistance point. So 59.5. Okay, I could program modify or delete. I could add a take profit, 59 point, let's say 6, modify. There we go. Now I have my take profit mark up here, which is, look at the setup here. Resistance level here, I'm getting, my take profit is before the end of the resistance. My take profit has a potential profit about 3 times the distance of what I'm risking. I'm risking from here to here if this trade opens, and my potential profit is from here all the way up to here, okay? So you might say, well, that's only about 40 cents rise, 50 cents rise on the price of oil that you're going after. You know, if you do a 1-lot position, that's 1,000 barrels. On a 50-cent rise with 1 lot, you're making $500 on a small breakthrough move. If you're trading 10 lots, you can make 10 or $5,000 in 50 cents, right? So it's all relative to the size of the trade you're taking as to what you can make on a small move like that. It's called scalping the market, okay? And I've seen scalpers do very, very well, okay, many times, if you get proper entry points and exit points. But you obviously should trade the trade size that's right for you. Could be a micro lot if that's what you're trading, if that's what your balance calls for, okay? Omar, was that okay? You with me? You understand how we set that up and why we chose the entry point that we did on the buy stop? And now you can do the same thing with a sell stop. Omar, same thing. Sell stop, your entry point on a sell stop would be below this support. Okay, sell stop, you might program to sell here, maybe 58.75 or so. If it breaks the support, you sell. And your stop loss then might be back up above the support. Okay? Keep in mind, the oil inventory report can cause some spiking around as well. So don't have your stop loss too close necessarily. Okay? Or it can get tripped before the big movement occurs. Okay, I think this is a good place to stop. Thank you all for joining. It was a nice session, a lot of communication back and forth, some good questions, which is helpful. The next webinars will be same days next week, Monday, Tuesday, Wednesday, Monday evening, Tuesday, Wednesday, afternoon, morning, and we'll shuffle the topics for each day. All right, great. Thank you, everybody. Bye for now. Good luck with your trades. I hope to see a lot of success today, hopefully on maybe some of the assets we covered and some others even. Okay, bye for now.